Good morning, this is Ken Long from Tortoise Capital with a review of the trades of the week for the week ending December 15th, 2012. I want to start with a trade from the 12th that is a sideways quiet channel. So this is December 12th, 2012. Symbol is SVXY, which is the inverse VIX ETF, right around lunchtime. And you can see the sideways quiet channel here with a narrow range river, and the slope is basically flat, the red line, and both regression lines and the price ribbon are inside the channel, and then the breakout occurs here at about 12:08. That's where I'm supposed to enter in the blue circle. I elect to wait till the green circle to enter. I was concerned about the volume weighted average price acting as resistance as it had before. I wanted to see it get through and then continue before I entered. So I actually enter here at 77 even with a 30-cent initial stop just below the Bollinger Band mean, which is the red line. It moves out sharply in our direction, gets up to 78, and then price begins to decay. I'm supposed to exit here after I had 3R in hand and it's starting to weaken. I'm supposed to exit here and not later than the regression line crossover signal, which occurs here. I didn't. I'm not sure why. I had 3R in hand. The rest of the market was moving up well, and so I elected to stick around. It got tense here, but it found support north of the Bollinger Band mean. Recovers. Does not make a new high. Now the 30-period regression line rolls over, but it's not failing fast, so I like to hang on just a little longer to see. But by the time the 30 comes back into the river and we're approaching the Bollinger Band mean, I elect to exit here in the red circle. What I'm supposed to do is buy the exit from the river, and I'm supposed to cash this after a nice run-up of 3R in hand. I should be preserving this win not later than the regression line crossover. So this is a sloppy trade, not good execution, took on more risk than I needed to. Next trade up is on the 13th. This is in UVXY. This is also a sideways quiet channel. This is the entry. You can see again, narrow range, sideways motion in the channel, price in both regression lines and the VWAP. Everything is inside the river. And now it exits the river here. You can see the little dragon's jaw starting to open up. So we take the entry at 1955 with a 30-cent initial stop. This one has us outside of the river on the initial stop. It moves up in about 10 minutes. It moves out smartly, so I'm going to move my stop to 1960 and some change here so that I am in a no-lose position. This trade unfolds in the following way. It moves up to almost 20. Is now riding the north edge, the north bank of the river. The 30 is well outside the river. It takes out the previous intraday swing high. I make my second entry at 20.05 with a 30-cent initial stop. I'm adjusting my stop all the way up as we go. It moves out again, hesitates a little bit at 20.20, takes off again. The rest of the market is failing, so I like this move in UVXY, which is the double volatility ETF. I get my third entry here at 20.25, also a 30-cent stop. It gets a high bar up here to about 20.55, pulls back, so that's starting to look like an exhaustion bar. The ribbon is starting to roll over. Price is back to the 10-period regression line. It's made a nice move. I had almost 6R in hand at this point. I cash everything at 20.45 and lock in 4.5R. Next trade on the 13th, this is TZA. This is the inverse triple leveraged Russell 2000. It's been going up all day, meaning the Russell's going down. It had a sideways quiet channel moment here and then a continuation. I didn't take that trade. That's when I was in the UVXY trade, which had all my attention. It gets a regression line crossover. When that happens after a nice move in an upward trend, we expect it to come back and test the Bollinger Band mean, the red line, which it did, came back to the river, found support, started to move out again while the rest of the market was weak. So I make my entry at 15.01 with a 10-cent stop which is just outside of the river but above the VWAP, and I'm expecting a continuation play on that one. So that one really is just how to get started and at the moment of entry. This is let's see. This is the 14th, so this is Friday. This was early in the day. The blue line is where the market opened, and I'm looking at my total screen here. I've got my quote grid, which are all my candidates for the day, sorted by the percent change. The dark blue on TZA says it just made a new low, which means TNA should be making a new high, which it is. So I'm looking at SVXY to play the decline of volatility, UVXY in case volatility is going up. In this case, you can see it made a new low and it's fallen out of the river. So I really like the long side version on this one. And TNA was in good shape here, already up 0.8 for the day and well ahead of SPY. And now I can see IWM is better than SPY, so I want to be on an index going long. TNA is my index of choice here. I could also be playing CLF at 33.70, which would have been, it turns out, a much better trade. However, it is what it is. So I decide I'm going to play two trades, one in SVXY and one in TNA. I play sideways quiet channel as it leaves the river here with a 30-cent stop. In SVXY, I buy when it finds support at the VWAP with a higher low and starts moving up across the Bollinger Band mean, and I go ahead and take the entry with a 30-cent stop also. It turns out that both of these trades roll over and fail, so this is left the river moving out well but then collapses, and I decide to scratch the trade here with a fractional gain. And the same thing in TNA. Moves out to 59. I've got an R in hand. I'm holding on, waiting to see. Now, ribbon crosses the 30-period regression line, and I don't want to lose money in that trade, so I scratch both of those trades. Here's one also on the 14th. Later on CLF, it has some sideways quiet channel qualities here, finding support near the bottom of the river in the VWAP. Here was a big sellout out of the river that immediately reversed. It gets me a regression line crossover. This looks like a shakeout, fake sell-off here. So I go ahead and buy this at 33.80 with a 30-cent initial stop, which is right at the swing low of this channel down. It finds support at the Bollinger Band mean, keeps moving out. It makes a nice sharp move up, price leaving the river, but then it can't hold. Now, is that a false breakout? Is that the beginning of a leg up? I don't know. But I had an R in hand here, and I don't want to turn this into a losing trade. That would have hurt twice as much as just taking a 1R loss. And so I moved my stop up to just below the Bollinger Band mean here. So even if I get stopped out, I'm not losing any money on this trade. And let's see. We'll check and see what happens. So there was the entry. There was a regression line crossover. There was the spike out of the river. That's what caused me to move my stop up here below the Bollinger Band mean. Chops around, starts taking off again, gets up to 34.10. Can't hold that. Doesn't look like it's going to be able to leave the VWAP. And it's getting on towards the afternoon. So I go ahead and take this exit here at 34.05 for a 0.8R fractional win. So those are the trades of the week, and not especially excellent on my execution, but in the money, and this is just part of the reflective learning. I tighten up my technique for next week. So that's Ken Long with the trades of the week for that ends in December 15th, 2012. Good trading.